Hi, welcome to the Market Alert for Tuesday, the 8th of May 2018. So we're going to go back to Friday. We had the non-farm payroll figures out, and as I said in the alert on this day, that if the figures came out higher than the previous, then this would be good for the market. So even though they're lower than what was actually forecast, they are higher than the previous 135k. So the market's reaction to all of this, let's start off with the pound. The market was fairly quiet, waiting for news on Friday. You can see there was resistance there at the daily pivot, even coming back to it at this point. Bit of a sell signal before the market retraced 62-76%, and then we got into the news, and this sent the market to the downside. And this also, of course, sent the dollar, this is the dollar index, moving to the upside as well. This is a daily chart of the dollar index, so this is not just the reaction to the news on Friday. You can see how the markets are broken out. We had the big move to the downside, and the markets consolidated, and then eventually blown out to the upside there. So the dollar gaining strength again, having had a period of where there was a lot of weakness. So in the daily chart, again, this weakness continuing. You can see the market trading below the 76% that we've had drawn in here. The next downside target is going to be the 134.57 if the weakness continues. If this is taken out, then we'll see prices accelerate down to, I'll just bring this in so we can see, down to this area over here, and obviously a few 76% in between as well. So you'll be looking for the market to stop in this sort of area, 133, a big round number there as well. News for today, let's have a look, see if we've got any. It's still a bank holiday in Europe, and Powell's actually out speaking, which makes a change. Not really seen much of him since he took office in February. We've got the Halifax, well, I say when he's speaking, he's out at 8:15 as well, just to throw that into the mix. This is obviously before everything gets going. He must be abroad at the moment. And then we've got the Halifax house figures, which look to show a bit of a slowing there. And then Trump is going to speak at 7 p.m. This evening. So just to keep that one in mind as well. I don't see how that's really going to have too much impact on the markets. Although saying that, yesterday he sent a tweet out that sent the oil market into a bit of a spin. No surprise there, really. Right. The Dow, this is Friday, market moving higher after the news. Let's just have a look at the market's reaction to the news. This is where the news hit the market with the non-farm payroll figures. Eventually the market came down, found support down at this level, which is going to be the 23,800 level, before you can see major buying hit the market there. And then prices just never stopped for the whole time. It was a good 400 points, I think, if not more. Let's just go from the low to the high, get a ballpark figure there. 561 point range to go into the holiday weekend on. And then yesterday in the Dow, let's just move through the overnight and weekend. And a narrow range yesterday. Europe was closed, and you can see there quite a very narrow range, only of 100 points there, and then a bit of a sell-off towards the end of the session. I certainly wasn't watching it yesterday. The weather's been fantastic in the UK for the last few days, and long may it continue. Right, so the Dow having pulled back from the shakeout of last night, yeah, you can see it's stuck in a bit of a sideways range. And the bigger picture, let's have a bit of a tidy. We can see that we came down to this 76%, 62. We can get rid of this. We can get rid of this. We went through this one on Friday, sat watching that one drive through, and now if we just drag these across here, so it makes a bit more space. No guarantee of this market continuing to move higher, but one thing is interesting, we are in May, and the old adage is sell in May, go away, so watch for the market to find some resistance, even if it's at this level, before we get a move to the downside. A few years ago I did some research, and out of the last 10 years, 8 times out of 10 the market had actually dropped. Last year it didn't, as it was Trump's first year in office, and the market continued to move higher. We've already got a bit of a shakeout in the background from January. So any rally in this market at the moment is likely to present the opportunity to actually go short. And you can see, if I just drag this across, you've got this long range sort of trend now that's there. If we move to there, see the market's just at that level and just trying to break through. I'll leave that one on there. Let's see what happens. So there is some resistance around, and all of these levels are important. Keep an eye on them, because as I say, we are in May at the moment, and typically and seasonally the market does move lower there. And finally, in Bitcoin, a bit of a pullback yesterday in this as well, breaking the trend line that we've had in, looking a bit weak as well at the moment. We can remove this 76%, and we'll remove this one as well, because this was one that was drawn in previously off this high to this low. Let's just get rid of this and go to markup. And let's just draw in from this low to this high, and that's where you can expect the first sort of support to be in this market. And also, again, you want to see the market break through the 20 bar average there. You want to see it break through and close through as well. Only a slight increase yesterday, but then most of Europe was out enjoying the sunshine. Right, that's it for this one, all caught up. If there's anything to report today, I will let you know. Other than that, thanks for watching. See you in the next one.